Trades. If you have not subscribed, don't forget to like and subscribe. So today in this video we're gonna talk about how to find a great stock, the stock which runs from anywhere from 50-60% to almost, like in case of Zoom, we had 600% runner. So I'm gonna kind of go through a lot of the characteristics for all these stocks and how do you find those stocks and what do you look into it, right? So look at this screeners, like you get all the runner, like Netflix ran like 50-60%, PayPal, Zoom almost 700%, Lowe's great runner, Melly, a lot of CrowdStrike almost from 40-50 this year beginning to almost 300%. Etsy had a great run, same with the check, right? So a lot of these like apps, if you can look into those apps, and if you look at more, you have Purple Innovation, right? So what are the common thing for these stocks? They have something in common, so we're gonna look into those and what to look for, right? So you should use this strategy to find the growth stock and add for your portfolio for uh, long-term portfolio. So we're gonna kind of look into Zoom, just an example, right? So Zoom, literally it was running around 70-80 in January, February. It had like a little bit of run up to 93 or something, but uh, recent IPO not too long ago it did. So it IPO'd with around 60-62 and went to the high of 104, then kind of cooled down in for till January or February, and finally when the COVID hit, that's when it kind of started making higher highs, and it was 155 before that, and it dipped to March April $100, and from then it has been like non-stop rise, and you can see that right now they are really, a lot of people say they are really overvalued, but their growth is like amazing growth. They're right now at 161, but if you notice, if you look into their earnings has been tremendous. Look at that. Zoom quarter ending July 31, 2020. Their earning, they increased by 355% year over year. So for that quarter last year from 2019, July 31 quarter, they increased by 3. That's amazing, right? So think about it. If you can keep up that, basically if it was valued like, let's say it was valued at like 30 billion, it kind of makes sense to value at 99 billion if they are making that much revenue and earnings and everything. And a lot of times with the software companies, the margins are really good, right? So if you look at like hardware company, like let's say Ford, if they sells 10 billion cars worth cars, and they, let's say they sell like 20 billion worth car, right? Their cost to build a car, there's a lot of, for software, I mean, of course, you have cost in research and development, servers and whatnot, but it's not as you compare with the physical product. For example, Boeing, or even look at Walmart, right? But their margins are, retail doesn't have that margin, while software has a great margin. So, but this is tremendous. Their growth has been tremendous. They're growing like at crazy pace, and in fact they made the same amount of money in the last quarter than they made whole of 2019. So those are some characteristics. When you are trying to find the stocks, you look for growth, right? Are they growing with like 30-40%, 50%, right? Are their margin really good? So if you look at their margins, if you look at their gross margin, we can see that, yeah, yeah, they have 73% margin, almost 76, 73, 80. That's a great margin. A little bit reduced, but again, look at that. Their trailing 12-month revenue, before it was 33, 39, 50, 60, 83, and now the last quarter like almost double, right? Almost, not quite, but almost double. Look at the gross profit, almost $1 billion. So great. So they've been running really well, and they're adding a lot of. So what happened is, as the company grows, like and if they have enough customers and enough trust, they can. So you probably heard about the news of Zoomtopia, where they announced a lot of, like, they are doing marketplace for, so basically you can host a Zoom meeting or something, monetize that, right? Maybe they can add ads or whatever, they have not yet decided, but they can do. The thing is, like, they are, so that's why these software companies spend a lot of money, and it may seems they are not profitable, but with the growth rate they are growing, once they have enough customer, they can tweak their their cost or revenue model or some things, and they can make a really good profit off it. So and also they started doing APIs for SDK for video conferencing. So a lot of companies, so for example, think about it, like you have some great idea about a startup, and but you don't want to build your video conferencing or video chatting or whatever it is from the ground up. You could just use their SDKs and probably pay them as you use, right? Platform as a service or whatever you want to call it. So again, these SaaS softwares are really cash cow machines. And if you look at that these days, like from the fitness, Zoom, to pretty much everyone is using Zoom. And I mean, if they are making from there, they are Zoom is charging them money too. So the great. So a few of the things, uh, yeah, and you can actually look into all those, right? So you can actually look into all those pretty much free in Finviz. And I found this a really great free website, ticker.com, where you can just put, let's say, Zoom, and you can actually research a lot of those data, right? Like this is the stock, the companies kind of give you the uh, brief overview about the company. You can see the news, pretty much all the news gathered about Zoom, and you can look at their financials. So what was their revenue, where they are spending, what's the gross profit. You can look into this and kind of go through that. So pretty much everything is like, look at the valuations, how they are valued, right? So if you look at that 2019, they're valued at like total enterprise value by revenue. So this is a different valuation methods. So here they are valuing by enterprise value by revenue, enterprise EBITDA. So price by normalized earnings, price to cash flow per share. So different methods, right? But look at that. So they are definitely a little bit in the upper side, but look at that, 26, 25. So yeah. um, hmm. Oh, okay, it does. Oh, okay, so wow, so this is a nice chart. This is pretty good chart. So based on the earning, it's adjust. So if you want to buy it, don't want to buy it here, right? Too much overvalue, but this is a good point, right? So okay, I guess that's after earning or something adjusted. Oh wow. Oh, cause they were really high, then dropped. Okay, makes sense. That's pretty cool. Anyway, you can see that, right? So 19 was 26, then 25, 39, 37, 54. But think about it. If they can double it, everything's, and if it's constant, then it can be like 25, right? So they can double their revenue, double their profit and everything. So everything is constant, assuming that's 54. That just becomes half next year. If they can do that, then it's not too bad. It's 26%, same as 2019 how it was valued. So yeah, you can look into all those and kind of play around with this. That's pretty cool. But but some of the characteristics I found in each and every company, right? So pretty much all the company, they had a great revenue growth, right? Their earning per shares was increasing at least like 20-25%. So that's the other characteristics. And you should look at, not only that, you should look at like how the institution is being, like institution loves Zoom, right? They're like, you can have a great company, great revenue, but if the Wall Street hit, um, you cannot really move. A lot of people's like things like, you're $1 million, or somebody's, like 20,000, 50,000 shares, or even couple $1 million does not move a needle. It needs a lot of money. Because if you look at that, right, how much Zoom trades every day? If you look at Zoom traded, like just today it traded like 15 million. That was a total volume. That's a lot of money. 15 million times 155, right? So that's a lot of no, not 155, sorry, whatever the price is, probably 568, right? So that's a lot of $1 billion, right? So and only this big company has a lot of money. So basically institutional investment. Like institution need to grow their portfolio, so whether it's, that's why it matters, like when companies get added to SPY, so a lot of rebalancing happening, so people's gonna buy, and it's kind of help drive the price up. Also, when the stock is added to different funds, right, there are literally thousands and thousands of funds. You can, I think there is some website where you can check it, but you can see that if it's a, how is institution interested, is institution buying it, right? So you got to look at all those things, and you can literally find a lot of these growth companies. So yeah, I just wanted to kind of talk about a little bit of fundamentals and how to find a high growth company, but that's about it in this video. If you like my video, don't forget to comment below. Thank you.